To all our viewers from the U.S., Korea, and around the world, welcome to Global Money Talk by SamPro TV, live from the floor of the New York Stock Exchange. I'm your host, Remy Blair, and you're watching our live broadcast from the financial capital of the nation in New York City. We'll begin the hour with the market briefing for an exciting live coverage of U.S. markets, and then we'll bring you market insights for an in-depth conversation with market experts. And today for the market insight, we have Dan Ha, co-founder and portfolio manager of Scrutiny Asset Management, for an expert discussion on gold. So make sure to stay on for the entire show. But first, for the market briefing, let's welcome JD Durkin, CBS contributor and host of Public.com. Thank you so much, JD, for joining me.
Good morning. Happy Friday Eve, as we like to say
Yes.
here.
So as you mentioned, we are awaiting jobs reports, non-farm payrolls today. So we are here the eve of that jobs report, and we're seeing mixed trading for U.S. equity averages on this Thursday. The Dow is off by 200 points, while the Nasdaq is up by nearly 0.25%, but the S&P 500 is lower. So what are you watching today, JD, especially on the heels of that economic data release?
Yeah, of course. Well, I mean, first of all, I think that ADP payroll, I think historically we like to take that with a little bit of a grain of salt because it's not an exact predictor for the number that we get the next day from the Bureau of Labor Statistics, but maybe it gives us some indication about what we can expect come tomorrow morning. The ADP figure, Remy, this morning, much softer than expected, 99,000 relative to an expectation or an estimate that was far higher. And it's kind of interesting to watch how investors are reacting across the major market indexes in response to that, but also to position themselves for tomorrow's jobs report. You mentioned the S&P. I always look at the most weighted tech names, obviously Apple, Microsoft, NVIDIA. All three of those names are down fractionally into the red. Amazon with a nice gain so far early on this Thursday morning, up about 0.9. And then over in the Dow, the price-weighted index, the 30 household names we cover most closely, the most weighted names there include United Health Group and Goldman, both in positive territory so far. Microsoft slipping a little bit, Home Depot and Caterpillar, also highly weighted names, up fractionally, help set the stage for the remainder of Thursday's session into tomorrow's very anticipated jobs report.
And as you mentioned, JD, we're keeping a close eye on the equity averages, but of course dissecting those jobs figures. So we got ADP, and we also got weekly jobless claims for the latest week, which fell by 5,000. And yesterday we got the jobs report as well. So a lot to digest when it comes to the labor market. But of course, 8:30 a.m. tomorrow, we will be getting non-farm payrolls as well as the unemployment report. And JD and I will bring you the latest from the exchange. But in terms of those data points, what are you watching out for tomorrow?
Well, I think we want to get a sense about the continuing deterioration, as some people would call it, of the labor market. What does that weakening of overall labor market conditions look like, and what does that do to reinforce the central bank's soft landing scenario, right? We will focus a lot on these. We know there may be knee-jerk reactions across the markets to some of these data points. I don't know if necessarily it will really move the Fed dramatically off of what we expect it to do come September 18th. It does appear as if, as of this morning, as of right now in real time, traders are pricing in a bit more of a likelihood of a 25 basis point rate cut for September 18th, or 0.25% off the federal funds rate, as opposed to more of a jumbo rate cut, which some people have been calling for quite some time. But if tomorrow's number is far softer than expected, maybe that might actually influence the Fed to do something where, at least right now, investors are not expecting them to do, which would be maybe 50 basis points come September 18th.
And speaking of September 18th, it's hard to believe that it's already the 5th of September, JD, and we have jobs reports coming out tomorrow. But of course, we also get inflation figures ahead of the September Fed meeting, so we'll keep a close eye on those figures as well as we edge closer to that date. But right now, why don't we start out by looking at different sectors, especially given the recent price action that we've seen? Because I think when we get a lot of market volatility, it's healthy to take a step back and look what's happening to the different sectors. So overall, if we look at what's happened so far in 2024, it's no surprise that communication services is up by over 20%. But when it comes to consumer discretionary as well as energy, what are we seeing right now?
Yeah, let's start with energy. I think it's a really interesting sector. I think a lot of investors might be surprised to find that shares of XLE, that's the State Street Spider Select ETF that covers energy stocks, they've done incredibly well since Joe Biden has been president, up about 120% since January 20th of 2021. For all the rhetoric we hear on the campaign trail about drill, baby, drill from one campaign, Democrats may be shying away from it. It's a sector that overall has done very well. It is the second weakest performer so far year to date. We are talking, of course, shares of XLE. The most weighted names in this sector include ExxonMobil and Chevron. Those two giants combined for 40% of the entire holdings of the ETF. It did close yesterday just below its 200-day moving average. I like to try and look at the relationship between the 50 and the 200. So it's a really interesting sector, I think, to keep our eyes on as we get closer to the election. And then what will that post-election reaction look like for energy stocks? In 2016, after we learned that Donald Trump defeated Hillary Clinton, energy stocks skyrocketed in the fall, late as we got closer to Trump taking the oath of office. I'll be watching for shares to see how energy stocks react in the next few months here in U.S. politics.
And also for our viewers who are looking at that chart, that is a one-day chart, but for perspective, it would be helpful to look at a chart that goes out further, not just one day, to get even more perspective in terms of what JD was talking about. So now that we've covered energy, let's move on to take a look at what we're seeing in technology. So we know that there's been a lot of focus on tech this year. So tell us what's going on in this space.
This is the worst performing sector of the last 5 days, yet is also the best performing sector of the last 5 years. These are the splashy, pro-growth, big tech, many of the Magnificent Seven names that we know and love tend to be in XLK, the technology ETF. Microsoft and NVIDIA are 40% of that ETF. Today, in terms of intraday performance, it is up fractionally, not the strongest performer, but not doing that badly. It's up about 0.2%. It is dragging behind communication services and consumer discretionary. But if you were to take a step back and look at year to date, technology is up 8.9% overall, still lagging the broader market. But of course, in terms of pure portfolio plays, lots of investors out there love to have these splashy tech companies. And I would argue there really aren't very many better ETFs for that than XLK. I think it's an important one to continue to follow.
And for this fund, JD, can you tell us about some of the holdings, especially some of those splashy names that you mentioned?
Yeah, of course. Well, I mean, obviously, I think that the top dog of the group is Microsoft. It's almost 22% of the entire ETF. NVIDIA makes up 18%, and then, of course, your big names like Apple, Broadcom, really interesting. AVGO is the ticker symbol. We'll hear from them coming up after the bell today. What does the ongoing demand look like for graphics and GPU processors? Really important to that number, to that company, which is the 11th largest company in the world. It's the 4th most weighted name in technology holdings. And then as you go down the list, it includes names like Adobe, Salesforce, AMD, and Oracle.
And while we're at it, you mentioned that we will be getting earnings out after the closing bell here today on this Thursday. So what can we expect from those results, and what are you paying attention to?
Well, at least in terms of Broadcom, we want to see what was sort of pre-written by NVIDIA earnings that we're taking into Broadcom, right? They're not the exact company, but maybe there are shared similarities. We're looking for that overall potential slowdown to start in terms of the GPU processing demand. How does that impact a company that maybe doesn't get talked about as much in the AI hype space as NVIDIA, but certainly, like we said, the 11th largest market cap in the world. It's over $700 billion. Broadcom, an incredibly important company. It opened the year trading at 109. The stock has surged as high as 185 before falling back a little bit. The company did have, of course, its 10-for-1 stock split earlier this summer, which we followed. 23 analyst ratings on the stock, only one hold, 22 buy ratings on AVGO. So even despite some choppiness from time to time, it's still a long-term buy in the eyes of many analysts here on Wall Street.
And we'll make sure to bring you the results of those earnings tomorrow morning, although our main focus will be on jobs. So that is something that we'll be keeping our eyes on as we head into the rest of today's session. And JD, we've talked about the consumer, the American consumer before. So what are we seeing when it comes to consumer discretionary? Because in terms of that sector, they didn't have a great August, but in terms of 2024 performance, they are still up. But what about this particular fund that you're looking at?
Yeah, these are shares of XLY, also from State Street. These are the cyclicals, the consumer discretionary names. The idea being, what are the sorts of companies you might be willing to spend a little bit more money on if you have that little bit of extra discretionary income? If you feel more confident about your personal economic situation, maybe you'll spend a little bit more money on an Amazon. The challenge with this particular ETF is that the second most weighted name, believe it or not, is Tesla. Tesla is very much a wild card. Many people have argued Tesla shares move based on Elon Musk's popularity in many ways. So that has really kind of threatened, I think, overall the integrity of the ETF and how it trades. Amazon makes up 20% of this ETF. It did hit its 52-week high of 194 back in July. The August 5th sell-off saw the number drop down to 180. You see it there on your screen, trading at about 187. This really tells me about the resiliency of consumer spending overall, but again, keeping in mind, Tesla, which is 16% of the ETF you're looking at your screen right now, is kind of that Elon Musk-fueled wild card and a very volatile stock in and of itself.
And JD, we've talked about the American consumer not just when it comes to the earnings reports that we saw, as well as same-store sales, as well as those retail sale numbers that we got in the latest month, which came in stronger than expected. But we're seeing this bifurcation, of course, when it comes to the lower income spender versus middle class, and the 1%ers who can afford to buy anything. But even then, we're seeing the American consumer being very choosy, shall we say.
Yeah, and I think it puts the word discretionary into the phrase consumer discretionary, right? We talked about this on the broadcast yesterday, that wealthier Americans are opting to shop for their basics at more discount retailers, because I think we're now living in a reality where we recognize that there is upward pressure on prices for fuel, for rent, for food. Where can we afford to cut back? And I think that's why it drives a lot of the movement in these consumer discretionary names. And Amazon is without a doubt the most important one. Everyone loves Amazon, got an Amazon Prime account. You feel good about your situation. You're willing to spend that extra $30 or $40 maybe on an Amazon purchase or two. You see that reflected. So it kind of gives us a nice look under the hood about how consumers are feeling in terms of their own confidence, their own positioning, and maybe a bit about how they see things moving forward. I mean, a lot of economists say the stock market is really the best leading indicator of the economy, so consumer discretionary stocks are so important to keep an eye on as a result.
Absolutely, JD, and I think that was a great summary of some of the sectors that we're keeping our eyes on here at the New York Stock Exchange. So we'll do a quick market check as we head into our next segment today. And we're seeing the Dow Jones Industrial Average lower by about 0.5%. The S&P 500 still off by 0.2%, while the Nasdaq Composite Index is in positive territory, up by 0.3%. So JD, you and I were talking about the American consumer, and we will be talking about the implications of economic policy for both Kamala Harris as well as Donald Trump. Donald Trump will be speaking in New York later this afternoon at 12 p.m. Eastern Time, so of course we will be bringing you the latest from that tomorrow morning. But let's take a look at some of the market moves that we're seeing, and we'll start out by looking at U.S. Steel. So let's see where shares are trading on this Thursday morning, because yesterday we saw U.S. Steel shares drop by 17%, and that came on the heels of reports that Biden may block the U.S. Steel deal. And both U.S. Steel as well as Nippon Steel said they have not received any update or executive order regarding the national security review. So break this down for us, JD. What's going on?
Oh my goodness. Well, first of all, the stock is getting hammered year to date. U.S. Steel is down 36%. You know, this is the sort of deal where I think a lot of people are arguing, even if the economics of it makes sense, unfortunately, the politics don't. U.S. Steel, one of the oldest, most iconic industrial companies. This is a company that went public right here on the floor of the New York Stock Exchange and was added to the Dow all the way back in 1901, just 5 years after the creation of the Dow. One of the longest running companies to be on the Dow, was there all the way until the early 1990s. And I think that underscores this great American spirit of manufacturing, resiliency, these iconic brands. And that helps explain, I think, why union workers in Pennsylvania and why now both campaigns, the Harris and Trump campaign, are against this deal going through. Nippon says, in terms of their own struggle for manufacturing and output, they would love to make a deal with a company like U.S. Steel. Obviously, U.S. Steel would like to make the deal with Nippon. And part of their argument is to say, in terms of geopolitics, who better than one of our most important allies in the world stage than Japan in order to combat the rise of influence from manufacturing from countries like China. I believe we have a statement for U.S. Steel, but it is worth noting what the company said in response to this report, that CFIUS, which is this government agency, is set to make a recommendation against the deal going through. If that happens, President Biden expected to basically move forward and block the deal, agree with CFIUS's recommendation. U.S. Steel saying in that statement, we have not received any update or executive order in relation to the CFIUS process.
And also, JD, I understand that the company CEO has warned that the company will be forced to close steel mills if this $14.1 billion sale does not go through. So can you walk us through some of the implications that we're talking about here?
I mean, it's basically Nippon Steel on one hand versus the union leaders of groups like United Steelworkers on the other. And so, yes, the company, U.S. Steel, is now in a position to say, hey, we really want to communicate to all the power brokers involved that it is in our best interest and the best interest of our union workers for this deal to go through, because we don't want to have to shut down factories. We don't want to have to uproot our operation from Pittsburgh, Pennsylvania. And again, this gets back now to the heart of the electoral politics of all this. Pennsylvania is 19 electoral votes. It is the most important state for Kamala Harris and Donald Trump. Whoever wins Pennsylvania will likely win the presidency. That helps explain, I think, why both campaigns are messaging so aggressively about blocking this deal the way that they are. A part of the original frustration, according to reports, is that the companies did not foremost take into account the considerations of union groups. In other words, they did the deal directly with the company instead of including the union. That opened up the door to some early frustration. So not entirely clear how this is going to play itself out, but there's obviously huge implications for a great American legacy name with a proud tradition here at the New York Stock Exchange that also crosses over with the markets and politics more broadly.
Absolutely. Since you mentioned 1905, that was definitely before you and I were born, so quite a lot of history here that we're talking about. And you mentioned Pennsylvania. Of course, we're paying attention to Pennsylvania, that state, not just in terms of what that means for the overall presidential election, but the debate taking place next week, JD. So that's going to take place 9 p.m. Eastern Time on September 10th. And all eyes, all ears are on that debate. What can we expect to hear from both of the candidates?
I think they'll look to continue to make their case on economic populism. They're really both campaigning for the same type of voter, and it really just comes down to maybe a couple 100,000 Americans in 6 or 7 key states, arguably Wisconsin, Michigan, Pennsylvania being the 3 most important. So these types of policies that speak to that worker, pro-American spirit, Kamala Harris really positioning herself more and more as a pro-business candidate day after day. I would look for those expectations to be on the debate stage. I can't believe they're actually going to debate. I'd been sitting there wondering if there was kind of an off-ramp, whether or not it's going to happen, but as for now, it does appear as if it's going to. It's going to be a pretty wild event, and I know people all around the world will be tuned in to hear what the candidates have to say, specifically on the economy, I think.
Absolutely. I'm sure we will all be closely watching next week as those two take the stage. But while we're on the topic of economic policy, Donald Trump is scheduled to speak this afternoon, 12 p.m. Eastern Time at the Economic Club in New York. And given what's come out of the Harris camp and what's expected to come out of the Trump camp, can you lay out their economic policies for us and what that means for the stock market as well as Main Street, not just Wall Street, but also Main Street?
Well, we're still looking for the details, and that's always where the devil is, right? As we've talked about before, you campaign in poetry, you govern in prose, so it's a lot of economic populism. If you're Donald Trump, a lot of your messaging is, of course, tax cuts, reinforcing the tax cuts you had already passed in 2017, and then, of course, tariffs. That was so crucial to Donald Trump's presidency, the sort of trade war with countries like China. I would expect that to continue. And then from Vice President Harris, we've heard a lot about trying to help first-time home buyers, help small businesses with increase in tax subsidies, and then anything that she can message in terms of bringing prices down. The challenge for Vice President Harris, and I expect that to really be litigated on the debate stage, is Donald Trump's, I think, very easy argument to say, well, you've got this big plan, Madam Vice President, for day one inflation issues, yet you've been vice president for the last 4 years. Why haven't you and Joe Biden gone and done these things? You've had this opportunity since early 2021. So those are along the lines of what I expect for the markets or for the economy. And as we've talked about before, I think the investors will find a silver lining, regardless of who wins the election, to likely drive equities higher in the short term.
And JD, we are fast approaching the second half of global market talk today, so I do want to quickly take a look at what's happening in energy. So in today's trading session, we're looking at WTI prices. We can take a look at the chart right here on the screen, but I do want to mention that U.S. crude stockpile slumped by 7.4 million barrels last week, according to API data. So what are we seeing in terms of crude oil prices, and what do you make of potential delays out from OPEC?
Yeah, well, and that's a big one. Members of OPEC Plus, and this is really breaking news in the last little bit, the key oil alliance now delaying plans to hike production by the scheduled expected output of 180,000 barrels per day in the month of October. That is according to OPEC sources familiar, who reported that out to networks like or outlets like Bloomberg a short time ago. But this does come a day after oil rising, yes, but we did see WTI prices fall down below $70 a barrel. And of course, we're following what that means kind of indirectly for the national average of a gallon of gasoline in the U.S., which as of this morning is $3.30. So much higher than we were used to before the pandemic, but down about 50 cents or so, rather, from where we were 52 weeks ago.
And in New York morning trade, we are seeing Brent as well as WTI higher on the session by at least 1%. So we'll keep an eye on oil prices as we head into tomorrow's session as well. But very quickly, I want to focus on Verizon before we wrap up today's segment. So Verizon has agreed to buy Frontier Communications for $20 billion. That is quite a sum.
That's a lot
but
of money.
I know that you have talked about this here, but why does this matter? And do you think there are any concerns that this might not go through?
Well, to the first part, I think it establishes Verizon's commitment to a firmer fiber-based broadband strategy. Ultimately, even if you have these legacy telecom companies, they're always looking to adapt. They're always looking in the merger and acquisition space. But the challenge brings me to your second question, which are potential hurdles. We have seen previous departments of justice under both Republicans and Democrats at times be very skeptical about these sorts of deals from going through, concerns about what that means for a consumer if you limit competition. Much like the Nippon Steel U.S. Steel story, both companies will position this as being advantageous for both of them. It's a different story altogether to what degree regulators choose to get involved. You and I talked before the show about T-Mobile and Sprint, something previous DOJs had closely investigated and looked after, really to make sure consumers are not being squeezed out. I would expect much of the same conversation, even if this is, a staggering sum of money, so much so I sometimes have a hard time forming the words about it. But it is remarkable for a stock that is trading down about $41 a share. Verizon is the second lowest weighted Dow company at such a low share price, so it's going to be a fascinating story to watch unfold in the coming months.
And you mentioned fiber, and that happens to be the ticker symbol for Frontier, and we're just talking about this FYBR as well.
Pretty
so
cool.
We'll keep a close eye on those names. But as we head into break in today's session, I do want to say that we'll be keeping our eyes on that economic club statement by Trump, and then, of course, non-farm payroll. So as we head into tomorrow's session, JD, give us your take on what you're paying attention to in terms of the afternoon session here.
I think Broadcom earnings are going to be really important here for sure, and I'm also interested to see how does the dust continue to settle. As you and I are having this conversation, it is 11:23 local time here in New York. We're still only a couple of hours removed from those earlier data points we get. How does the market continue to digest that, specifically those big tech stocks? I'd like to see kind of how their response and a potential bounce back is for the rest of the session. And then Broadcom, I think, will drive a lot of the after hours into futures trading. And then, of course, it all sets the stage for the biggest, arguably the most important thing of the week. Is it most important? Jobs tomorrow?
I would say it's one of the most important things.
It's got to be way up there,
Absolutely.
big time. So we'll be here early, well caffeinated. Everyone on the floor will be. Really give us a sense for how tomorrow could be. It could be a huge day tomorrow, one way or the other, depending on what that print looks like. ADP gave us a bit of a sense, but it'll be really interesting to see those numbers cross the wire tomorrow morning.
Absolutely, JD, and we will both be here bright and early. That jobs report comes out at 8:30 a.m. Eastern Time, and of course, JD and I will be live from the New York Stock Exchange for Sampro TV, and we'll bring you not just the market reaction, but we'll dive into the details of the headline figure for non-farm payrolls, unemployment, and what this means for that all-important Fed meeting coming up in later this month. So JD, thank you so much for joining me, and I look forward to dissecting those numbers bright and early tomorrow morning.
See you bright and early. Thanks, Remy.
And after we come back from break, I will be joined by Dan Ha. So don't go away. We'll be right back with Global Market Talk live from the New York Stock Exchange.